Good afternoon and welcome to the DIACEUTICS PLC final results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll, and I would now like to hand you over to the team of DIACEUTICS PLC. Good afternoon to you.
Good afternoon, everybody, and welcome to today's call hosted by DIACEUTICS to discuss the company's full year 2024 results issued earlier today. My name is Simon Gillon, and I manage DIACEUTICS Investor Relations Programme. On the call today to discuss the results are Ryan Keeling, the Chief Executive Officer of DIACEUTICS, and Nick Roberts, the company's CFO. Before I hand you over to Ryan for his formal remarks, I would draw your attention to the forward-looking statement slide in our presentation, which is on screen now and also available to download at Investor Meets Companies and diaceutics.com. At this time, I will now turn the call over to Ryan Keeling. Ryan, go ahead, please.
Thank you, Simon, and thank you all for joining us today. Good afternoon and good morning to those of you joining us from the US. I'm delighted to report on what was a great year in 2024 for DIACEUTICS. The format of today is I'll talk you through some top lines, then I'm going to hand you over to Nick to take a deeper dive into some of the financials. And then I'll come back and do a bit of a refresh on the overall value proposition of the business. And I'll also take the opportunity to talk a little bit about 2025 and some of the observations we have in the market, particularly at a macro level. Just zooming us back then to 24, for those of you who have followed us or indeed are new to the story of DIACEUTICS is one of a journey and one of business transformation. And we feel through 24 we've moved the needle on most of the KPIs that are really indicating the direction of travel for our business. That is toward high recurring revenue, significant ARR proportion, increased revenue earnings, also quality of revenue, and really talk to that business transformation that we are seeing, enabled by our data, enabled by our tech, and more recently enabled by what we feel is a very appropriate use of AI in the business. Just going through some of the specifics, we are at the end of the 2024, saw the end of our 2-year investment cycle in the business. Just to remind you, at the back end of 22, we were had funds available to the tune of around 20 million. We wanted to invest around 8 million of that in the business, really to enable scale and to secure future growth of the business. We believe we've executed well against that 2-year program in a disciplined way. Nick will talk to the specifics of that, but we feel we already see the return on investment and the exceptional performance in 2024 is to an extent part of the delivery on that 8 million that we've invested over the last 2 years. We continue to grow the platform and scale the capabilities there. I talked a little bit about how we're leveraging AI. We, as other businesses in the space, are in an era where we can benefit from technology that is absolutely transformative in terms of what we can do with our data, what we can do with the products, and ultimately how we can impact the lives of patients. Remember, the purpose is a strong North Star for this business, and our ability to bring new and novel product, which we have done through the last 12 months, is really important, and AI is right at the core of that. As we go from using natural language processing, which is where we were with AI 2 or 3 years ago, now to producing our own agentic AI models to really leverage that next best action and do more with what we already have in the business is incredibly exciting. We continue to expand our business and our team, and we invest in that key talent, particularly in the US. Through the last 12 months, we have hired at a senior level in the US. We have brought a significant number of new VPs into the business, largely focused on commercial activities. We're also opened our US HQ, and we have continued to build our US sales team. Again, making some significant inroads into our most significant market. In terms of DXRX Signal, that is our lead product. I'll talk more about that and I have a use case to show you later for those not familiar with it. But suffice to say, it continues to go from strength to strength. And last year we identified over 600,000 patients in our data that we ultimately provided back to our pharma customers. This is 600,000 patients that may not have had the opportunity to be treated with the optimal treatment for their disease. And we believe we're playing a key part in educating physicians around what the next best action is for those patients. We continue to grow with our customers. Last year, we secured 3 new multi-year enterprise-wide engagements with a total ARR of 4.3 million. Those enterprise deals symbolize an increased embeddedness with our customers. We won't have them with every customer, but as we get more scaled and ultimately closer to our customers, we believe we will have more of those in the coming year and beyond. PMX is a product that we had a soft launch of last year. It is effectively an end-to-end commercialization solution. An easy way for you to think about PMX is it's a solution that is ultimately leveraging everything we've built in the business to date. That is our data, our technology, our engagement solutions, our marketing stack, and the right amount of analytics and expertise in terms in form of advisory and ultimately client management all come together to provide an end-to-end solution. Very exciting for us and a key part of our growth plans for the business is extracting more revenue per brand. And we've shown with our first PMX deal in 24 how we've gone from an average of 400K per year per brand to potentially over 3 million. Very exciting journey for the business. We're now working with 18 of the top 20 global pharma companies, and that is an excellent client list for us to have. The only 2 we're not working with are indigenous Chinese pharma, and we don't have plans to do any inroads into that market at this time. But suffice to say, we are well established and growing in those top 18 pharma and are very excited about the opportunity there. And I'll touch on it again, just given the importance. We really have moved into an execution phase now for this business. We've scaled the business, we've built the data, we've built the expertise and the people, we've built the platform. We'll continue to evolve an exciting roadmap there, but the days of significant build and development and R&D in the business are behind us. We'll continue to innovate, as I say, but not to the same extent as we were, and be very much customer driven and customer led going forward. The US market will remain a key focus of ours. I'll talk a bit about the macro environment there in a few slides' time, but suffice to say, we are very excited about the journey we're on in the US, and the building of the team there is really already driving growth for us. With that, I'm going to pause and I'm going to pass over to Nick to give you a run through some operational and financial highlights.
Thanks, Ryan, and thanks everyone for joining us. So a few slides here. I'll start off with this operational dashboard. This isn't all of our operational KPIs, obviously, but it is some of what we measure our success by, and I think really talk to the traction we've had over the last few years. Ryan already talked to the 7 enterprise-wide engagements. Just to remind everyone, we classify an engagement with a customer as enterprise when we're working with 3 or more of their assets, with their drugs that are currently in market, and we must be well embedded with those assets. So either have worked with them for multiple consecutive years and or have an element of annual recurring revenue with each of those brands as well. So we saw that increase up from 4 to 7 in 2024 with an ARR of 10.6 million, which is around about 2/3 of what our total ARR is. So you can see how important that those enterprise-wide customers are to our business. And those would also form, in addition, 18 of the top 20 pharma companies. So those 7 enterprise-wide engagements, they'd be part of those 18 top pharma companies that we're working with and that Ryan spoke to earlier. The number of people we have in the business, really the lifeblood of the business, is up from 184 as at the end of December 23 to 199. We will continue to invest in our people. That's invest in their skills and their training over the coming years, but also increase the headcount as well. The rate of increase will be lesser than over the last 2 years, that 2-year investment cycle, but it is important that we continue to add talent in our team, specifically in the US market, which is around about 90% of our revenue, which is predominantly in US dollars. Couple other key metrics on here for us that we helps measure our success, traction with our customers. The number of customers we work with, up 18% from 44 to 52, and the number of therapeutic brands we work with, up 23% from 69 in 2023 to 85 in 2024. They're really important metrics. We want to continue to build the number of brands we work with. So that's within existing customers as well as add new customers. And alongside that, we've seen the average revenue per brand increase 10% from 380,000 in 2023 to 420,000 in 2024. I'll talk to PMX. Ryan touched on this briefly, but I'll talk to us a bit more on how that is really driving the average revenue per brand for future years. Finally, I just touch on the bottom right box here, add a bit more color. Ryan talked about the investment in AI, investment in our technology. That investment in 2024 was 3.6 million, up from 2 million in 2023. And we continue to invest in the data that we use in the business. Data is key, lab data, claims data. There are other data sources in there as well. But that informs everything we do, from Signal all the way through our offering to our scientific and engagement services. Everything we do for our customers, all the advice we give them has a foundation in real world data. So they know that this isn't anecdotal, this is evidence-based advice we're giving them. I'll start talking about some of the key financial metrics now and our financial strength, which hopefully you'll see runs deep. So we continue to deliver exceptionally high margins. They're up to about 88% gross margin in 2024. Our 3-year revenue CAGR, compound annual growth rate, 32%. We continue to grow our ARR, so our annual recurring revenue. That is key to our business. That's key to the visibility of earnings, also the quality of earnings. As Ryan said, we're on a journey there from what was predominantly a consulting business in 2021 to a business now which has roughly 55% of its revenues on a recurring basis. And finally, we have a strong balance sheet, 12.7 million of cash as at the end of 2024, no debt, and we are fully funded to deliver on all of our organic growth plans for the foreseeable future. We continue to grow the business. We will continue to grow the business in 2025. And I think really importantly, we are focusing on growing the level of profitability. Just to remind you, those that are new to the story, we were profitable after tax in 2022. We took a 2-year investment. We decided to invest in a 2-year cycle where we would see a free cash outflow of 8 million. That's put us in great stead in terms of our technology base going forward. Now we're scaling the business from 2025 onwards, and we'll shift back to profitability and ultimately cash flow generation. Some of the key financial metrics, obviously more of these are captured in the RNS, but I just want to touch on some of the key ones. Most of these were pre-trailed as part of the trading update in January of 2024. But just to reiterate, revenue up to 32 million for 2024. That's up 39% on a constant currency basis, 36% 23 to 24, and a 32% 3-year CAGR. So all really strong metrics. Just to remind you, our business is predominantly focused in the US. That accounts for around about 92% of our revenue. Most of that revenue is contracted in US dollars. That is pharma's main market for commercializing their drugs, and that is where we built and optimized our business for. Our annual recurring revenue is up 23% to 16.8 million. And for the first time, we publish a NRR, a net revenue retention number, which I'm really pleased to see is 109%. That's something we'll continue to track and report to the market. That's really important, I feel, for investors to understand the quality of our earnings, but also our ability to generate more revenue from our existing clients. I think really showing how we're embedded and partnering with them. Our order book was 24.9 million as at the end of 2024, and of that, 17.7 million will be recognized in 2025. So that's already contracted revenue for 2025. That gives us somewhere around about 44-45% visibility on our guided revenue number for this year, which is around about 40 million, which is a great level of revenue coverage, and slightly up on around about 40% coverage we started the 2024 year in. The overall order book retracted ever so slightly from the end of 2023. Most of that, all of that retraction in the overall size of the order book related to contracted revenue that's in 26 and 2027. So it didn't impact our coverage for this year and our ability to hit guidance in the market. And we identified what the issue was there and have rectified that. Subsequently, this year, we've seen that position correct and a significant increase in our order book for 26, 27, and 28 increase in the first part of this year. Our gross profit margin up to 88%, up from 83% in 2023. And again, really pleased with that performance. That is slightly above where we'd expect it to be. On an ongoing basis, we'd expect around 85%. So really pleased with the 3% over performance there. Really, that's down to just mix of sales, a slightly higher focus on our data side of the business, which is slightly higher margin bit of the business. Not on this slide, but a key area I want to cover off is adjusted EBITDA. So we saw our adjusted EBITDA increase 50% to 4.2 million, up from 2.8 million in 2023. That's an EBITDA margin of 13%, slightly up on the 12% in 2023, and resulted in a net loss after tax of 1.7 million, which is about similar to the net loss after tax in 2023. As I mentioned earlier, that's the second of our 2-year investment phase. So from 2025 onwards, we're expecting that EBITDA margin to increase up into the high teens. That will result in a net profit after tax. That's the break even. That's the break even profitability we're looking for, and our initial shift into cash flow generation again. I'll just quickly finish off on the finance by giving an outlook onto the beginning part of 2025. So our trading for the first 4 months of 2025. Really pleasing. We saw the revenue up 35% to the end of April 2025 at 8.4 million. Our TCV was up 93% to 18.7 million pounds. And we saw our cash increase from 12.7 to 13.7 as at April 2024. So, sorry, 2025. And of course, a lot of that cash flow generation in the first quarter of this year is generated by that invoicing that is done in the back half of 2024. Our order book, I alluded to this earlier, our order book as at the end of April is around about 35 million pounds. So you can see a significant step up on the 24.9 that we did have as at the end of December 24, and a correction of that slight retraction we saw in the 2024 year. I'm now going to hand over to Ryan to speak a little bit more about the business.
Thank you, Nick. And I'd like to take the opportunity just to refresh on the business case and ultimately the value proposition that we present. We lead with this headline, and for those of you who follow us, you'll have heard me say this before, but I'll reiterate. Our purpose, our alignment to our customers really focused around helping them find patients. We do that particularly well in challenging disease areas, complex disease areas, or where the diagnostic journey for patients is quite convoluted and hard to track and manage for the physician. And to date, a lot of that has been in precision medicine, but the future is beyond precision medicine, and I'll talk to that also. In terms of our assets, we have four key assets in this business, three of which I'll walk you through now. One is the lab network. Just to remind everyone what this is, we have over 1,000 labs globally that we partner with. We're now up around 650 of those in the United States, and we go after a certain sector of the lab, which is a very small to medium-sized lab, but many of them that we partner with to enable a data feed of what is effectively proprietary data into DIACEUTICS that we use to power the business. We do a lot of work with that data in order to standardize it. And through the last 2 years, we've built automation to really make the analytics and the data pipeline coming out of those labs fully automated. Our business is very much focused on getting insights quickly. We talk a lot about speed to insight, and we are best in class as it pertains to receiving data from the lab in a very timely way and ultimately providing that through to our customers for use cases that I'll go into in a moment. And the speed at which we do it will become clear as to why. The platform is how we deliver our offering, and effectively that's an integration between DIACEUTICS and our customers at their marketing level, at their sales level, such as their CRM, etc. And we continue to build ever increasing tech and capability there to really make it easy to switch DIACEUTICS on and hard to switch us off. The fourth asset that we don't talk to in this slide, but is implied, is our people. And we continue to grow very successfully as it pertains to the talent we have in the business. It's hard to find people that can deliver within DIACEUTICS. We have a very specific role, we have a very specific purpose, and therefore growing talent from within is a key part of what we try to do. We have significant links now with local university and other academia. So we have a very scalable solution in graduate training programs, etc. And that's been a successful thing for us now into our third year. We also are filling the funnel in terms of people at the top end with new VPs coming into the business, bringing significant experience and capability, as well as continued investment across our people. The people drive the business, and it is a key differentiator for us. While we are automating and scaling and building a lot of tech, it is the people that front it and ultimately deliver it that really is servicing pharma in a way that we're not just selling something into them, we're really serving them. And you'll see more on that as we talk to customer centricity in a minute. Next slide, please. Quick touch on a case study. This is our lead product called Signal, and in its simplest form, what Signal does is enable pharmaceutical companies, large and small, to understand where are the physicians that are treating patients eligible for their drug. And this chart at the bottom is an example of 18 months worth of data, with each bar representing the number of patients starting on what was a newly launched drug in lung cancer. And the bar represents the number of patients starting on that drug each week. We switched our data on 6 months into the first year of launch for this drug, and you can see the pale blue bar is the additional patients that we found that ultimately started on that treatment. And you can see week on week and ultimately into the following year, we were able to almost double, in some cases more than double, the number of patients who were starting on that drug, transforming the forecast, transforming the success of this. It's still a current client today, and we have a significant ROI opportunity. Just to put some context around it, each patient is on average worth around about $220,000 per patient per year for this customer. And that means that there's a significant ROI based on the cost to bring in our data. That's an ROI that we believe we can work on in terms of charging more, and we have a solution in PMX that starts to close the gap in terms of that return on investment. Next slide. A quick recap on what is precision medicine, and ultimately we are very fortunate in that we work in a part of the pharmaceutical sector that is growing. Last year there were 48 precision medicine drugs brought to market and are FDA approved. That's more than we've ever seen, and more than actually we were anticipating, because some got accelerated approvals. So the market's growing, and that is to a large extent why we had a great year in 2024. There were more drugs coming to market, and that increase is a trend that is not new. We're seeing on average a market that's increasing 30% year on year, and we've long since talked about where our growth will come from. Will be from new brands, new drugs coming to market, as well as deriving more revenue per brand. And in 2024, we did both. We increased the number of drugs, and we increased the revenue per brand that we're working on. In terms of precision medicine, we see around 250 PMs currently in the market. As of the end of 24, we're working on 85 of those. So that gives you some sort of sense of where the headroom is. Beyond precision medicine, there's a significant opportunity again, which we'll quantify at another time. But suffice to say that there is increased appetite for our services, given that we've shown so much success in precision medicine. Next slide, please. Why did we focus on precision medicine, and why does it still fuel and drive a lot of our growth? One of the things you need to understand is that by nature, a precision medicine drug is very reliant on the diagnostic pathway, the diagnostic journey of these patients, i.e. the tests that are performed to diagnose a disease, particularly in the context of molecular derived medicine, molecular diagnostics, etc. Us having such rich access to lab and genomic data enables us to be very differentiated in precision medicine, because we really understand fundamentally how these patients are diagnosed. So that's part of the reason why we're so focused there. The next piece is that there's complexity. Precision medicine brings complexity to the market, and we're seeing new drugs coming to market all the time. I just talked about that in the previous slide. New tests, new biomarkers required, and there's a lot to keep up with. It's not simple, and it's not easy. It's a great story for patients, and great for patients who maybe previously had a disease that wasn't treatable, or certainly wasn't treatable in a targeted way. We're now seeing science really deliver in terms of availability of drugs, but that presents challenges for commercialization and presents challenges for just keeping up to speed with the latest trends. The other thing, of course, is that the precision medicine is typically targeting smaller patient cohorts, and we are at a point where we might be trying to identify patients that a physician might only see one patient like this per year, or maybe it's one every 5 years if it's a particularly rare disease. And that changes the dynamics of how we think about prescribing and knowledge and understanding of disease. And if you think about our data, back to the timely nature of our data, a physician might be faced with a treatment decision they need to make today. If we know in real time that they have a patient with the disease, that enables our pharmaceutical client to engage and ultimately try to educate and bring that patient onto drug. That is the use case where we're strongest, and that's a key part of what we do with Signal and laterally with our physician engage and PMX solution. Next slide, please. Speaking of PMX, I'm going to pass over to Nick, who's going to walk you through our PMX solution with a particular slant on the financial construct and how we are ultimately driving more value for Diaceutics by bringing together everything that we've built to date into one solution.
Thanks, Ryan. So I think based on the Signal case study you saw earlier, the uniqueness of the data and our ability to target patients, find those hard to find patients, I think coupled with the complex requirements that Ryan just went through regarding precision medicines, we saw that Signal is a great offering for our customers. It really helps them target their sales teams in finding patients, engaging with physicians, and converting patients onto drug. But there was a gap. There was a gap in that our customers needed more support, and we could offer that, underpinned by Signal and our other offerings, to really drive better engagement with physicians and better levels of prescription and patients moving on to drug. And that's what PMX is. It basically takes what we have, Signal at the core of it, our data, and then adds on physician engage, it adds on lab engage, it adds on our consulting expertise, our go-to-market expertise, and it allows us to really educate the market and maximize the return on investment for our customers. What that means for our customers is that they can go to market quicker, they can ramp up to maximum sales potential in a shorter amount of time and increase their ROI and essentially the value of their company. PMX isn't just a pipe dream for us, it is something that we have developed and we have launched with the first commercial arrangement signed in August 2024, which I'll talk to in just one moment. Essentially, what PMX does by bundling all of the products together that we have in a bespoke suite of offerings, which gives the customer a tailored output depending on their specifics of their drug launch, it allows us to increase the revenue for that one brand from around about 400,000 that we're currently at to over 3 million per brand per year. PMX won't be applicable for all drugs and all customers we're working with, but we think it is a significant advantage for many biotechs currently looking to commercialize their own assets if and when if they're unable to out-license those to big pharma, which has typically been the model for them. As I mentioned, we signed our first PMX agreement in August of 2024, and there's an RNS in the market about that. That was an 18-month offering to launch a precision medicine oncology drug in the US. And that went very successfully. We realized 1.5 million of that revenue, up to the point where the partner we are working with actually out-licensed that to Partner Therapeutics. And we successfully transitioned from them to the new license owner, Partner Therapeutics, and have continued to work with them from March of this year onwards. That deal, so we signed a new deal which superseded the old one and dovetailed in. That is worth £11.5 million up until September 2028, and is a significant win for us, both in terms of its value. As I said, that increased the average revenue for this brand per year to just over 3 million, and increases the visibility we have now that contract goes out into 2028 and is all recurring revenue. Is all recurring revenue and will contribute towards ARR. The one significant change we saw from the original PMX deal to the new one that we agreed with Partner Therapeutics is that we had a success fee based element in the original deal that allowed us to really work with our customer, partner with them, and where they were successful in commercializing that drug in the market, we would also financially benefit. We were happy to negotiate with Partner Therapeutics, whereby they wanted a straight service fee agreement. For us, that removes some of the potential upside. However, it did also remove some of the potential downside of the commercial traction of that drug, and again, contributes more towards the annual recurring revenue for this business going forward. So again, really happy to partner with Partner Therapeutics going forward, and looking forward to successfully launching their drug in the US. I'll finish off by just talking about what constitutes a PMX agreement. This is a very busy slide. I'm not going to talk us through every single point. The coloured boxes along the top there, running from left to right, they are the key stages we think about when we're working with a partner and talking to them about launching and commercializing a drug in the US market. And under each of those coloured boxes are the services, the solutions that we offer to them. When we're contracting with a partner, when we're bespoking the PMX offering, we sit down with them, understand their requirements, what we know of the market, what we've learned dealing with this for over 20 years now, and we tailor a precision medicine commercialization solution, a PMX solution for their drug. And that requires us picking off some of these key services, bolting them together over multiple years. So it's really a combination of all of our learnings and all of our products developed over the last 20 years or so. I'm really pleased that we continue to launch this, as Ryan said, a soft launch last year. We continue to launch it this year. We're running a webinar this week on the 15th of May on the Fierce Pharma website. That will be hosted by us, and we'll also have representatives from LEK, a leading consulting firm in the US and globally, and one of our customer partners in Meris, who will be talking about our PMX offering, the challenges of commercializing biotech assets in the market, and how we can help them overcome that. So really pleased that that's happening in the next couple of days. You can see that on the Fierce Pharma website and via LinkedIn if you're interested in watching that. I'm going to hand over to Ryan now to just talk about our customer success and see off the rest of the meeting.
Thank you, Nick. And just conscious of time, I wanted to leave enough time for questions. I'll maybe accelerate through the next few slides. Our journey here is really about getting much closer to customers, evolving from being a vendor to more toward partner. You can see here some of the success we have there. Overall, we have a 3.7 out of 4 score in terms of customer satisfaction. It's a key part of our business, and you can read for yourself some of the sentiment there on the slides. Suffice to say, something we're very proud of, and again, it's a key differentiator for us. These are very sophisticated customers. They know what they want. They know the level of service they expect, and we try as best we can to deliver that, and for the most part, we're being successful there. Next slide. I'll talk more about the recruitment, just in terms of the specific folks that we brought into the business. We're really transforming the leadership in this business, and notable hires such as Sandra Blake, who we brought in as our Chief People Officer, really transformed the way we think about our people deal and ultimately the direction of travel. Other key hires in marketing, with Amy McNeish joining the team, really driving that execution phase for our business, along with a host of other commercially focused VPs that are leading significant parts of the business. A majority of these are US based, and that's a bellwether for the direction of travel for our business. Next slide. I'm going to sum up and just recap on the business, where we are now as we continue the journey off the back of a strong 24. Nick talked a bit about the 2025 outlook, and just to recap, we have a very strong competitive advantage. We have 3 unique assets in the network of labs, the data, and the platform, and of course our people that we've talked about. We are proving out that compelling value proposition. We're now in our 4th year of consistent growth, and that is not an overnight success. That's through the work and investment that we've built in this business. But I think we're showing what we said we would do. In terms of financial strength, we have a high margin business. We're continuing to drive on that recurring revenue, improve the quality of our revenue with blue chip customers, a 3-year revenue CAGR of 32%, and we have good funding as we move into an era of profitability for the business. We're well set, and that's a key part of the journey so far. I want to pause for a moment and just address what's not on the slide, and that is a dynamic macro environment particularly relevant as such a high proportion of our business is in the US, and it would be remiss for me at least not to acknowledge that our customers, pharma in particular, are ultimately observing a market that is potentially evolving, and we've seen some changes, for instance, at the FDA, which might have an impact on the ability to approve drugs. It may speed it up, it may slow it down. Really hard to know, but we feel well placed to see what opportunities could come out of that without needing to pivot, without needing to add to our positioning. We feel there's a well placed for our model there. We see potential pressure coming under our customers in terms of drug pricing, and very recently, and even in the last 24 hours, there's been some evolution there. I'm personally talking directly to a number of our CEO customers. I'm very fortunate that they've given me some audience there, and I'm building a relationship that is into a few years now in maturity. I feel I'm having a relatively candid conversation and getting a good inside track on where they're concerned, where they see opportunity, where they're going to double down. A key message coming out of that for me is big focus on drugs on market, already on market, approved, and the freedom to operate there. That's a great story for us, given that the majority of our revenue and a big portion, for instance, of Signal revenues is for already approved drugs. So there's a level of immunity there, and certainly an area for us to really focus in. As for other things like FX headwinds with changing dollar, given so much of our revenue in dollar, we're hedged there to an extent. But if that goes, tracks up above kind of 133, 134, and beyond, there may be some impact to our top line in terms of just that FX conversion to sterling come year end. To date, we're tracking as expected, and Nick and I remain comfortable with the guidance in the market, both in terms of revenue and that road to profitability. We can obviously manage elements of the business as it pertains to cost, and we're doing that. Profitability will be delivered this year, and we're very consistent and comfortable with that. And as for what else we're doing, it's effectively just monitoring very closely, getting really close to customers, making sure that we know what they need at this time, and we feel we're well positioned to respond to that as we go, and keep watching. Right now, the business is as expected. We put out numbers up until the end of April in the RNS. They released precisely to give you some insight to a very live view of the business up until a few weeks ago, and as of now, we're still tracking to the plan. With that, I'm going to hand back to Simon, and he can facilitate some questions, please.
Sure, we have lots of interesting questions here. Paul L asks, what's the ongoing expense to pay labs and data sources, and how will this cost grow and develop over time?
Yeah, so happy to answer that. Thanks for the question. So currently our data spend is around about 4.2 million per year. We don't deliberately split out exactly how much of that is in relation to labs and other data sources. Again, that would be confidential information. That would be quite proprietary to the business, both from a competitor point of view as well as otherwise. But we don't see that significantly changing. We feel that is, again, we've built a lab network and a good level of coverage there to see through our needs. So we do expect to grow the 4.2 million up to around about 5 million or so in future years, but not significantly higher than that. There is an element of lab network maintenance costs within the business. So that is teams that are employed to help manage the platform and the lab network relationship. But again, they're just part of what we consider to be the normal operations of the business. And we don't see that significantly changing over the coming years. And that is predominantly because we have built a level of lab coverage in the US, but also more globally, which is stable and basically feeds all of our data and requirements for, as I say, the foreseeable future.
You secured 3 new enterprise-wide engagements in the year. How large is the remaining addressable market for similar large-scale contracts among your existing and potential customers? And that's from Christopher T.
I can answer that. There's a couple of variables there that you need to consider. Obviously, our ability to sign enterprise is based on the number of drugs that our customers have that are applicable to our model. Historically, that was precision medicine drugs. Now it's more kind of diagnostically enabled drugs. So, long answer to a quick question, which is we see immediately 4 more that are ripe for opportunity where we already have some traction and already selling into some of their brands and ready to tip over into enterprise through new launches they're bringing to market, or indeed some acquisition they're doing, or as we expand out our definition, we can bring more drugs in. So that's what we would expect to see through this year, and we're tracking well against that.
Ryan, a question for yourself. Any plans to move the listing to the US or have a dual listing?
I'm gonna not answer that one just at this moment in time. We will always look at what is the best opportunity for DIACEUTICS and how we ultimately bring value to shareholders and deliver on the business promise. Right now, we're happy enough where we are, and we're always looking at how we continue to build operations in the US, which is key for us, and the best way to do that.
Given the significant percentage of global pharma companies that you have as customers right now, how do you plan to expand revenue growth with that customer base?
Again, it's a simple model. So our growth will come from two axes. One is more brands within those existing customers, and their pipelines are rich, and that's their indigenous pipeline, or indeed as they acquire, bring new license and new drugs. We're indeed working with those biotechs that are bringing those drugs to market and extracting more revenue per brand, and that is through upselling, bringing new products to market, and ultimately up pricing as we go. That has been the recipe to date. It's delivered strong growth. We'll continue to do that. The key metrics to observe there is the end of brands per year and the revenue per brand. And with PMX, we've shown how we might leapfrog along the way there.
A lot of talk at the minute about data breaches and cybersecurity. How confident are you in the security of your enormous data lake?
Yeah, great question. And look, it's a risk for every business, but particularly a risk for a business that has data so embedded in its core operations. We have, we believe, taken all the precautions that are reasonably available to us. I'm somewhat comforted by the fact that we typically use best-in-class solutions. We don't do an awful lot off the shelf. We built a tech stack primarily based on AWS and are using tried and tested models and ultimately solutions that are industry standard. It's the way we put them together we think is novel. We have twice yearly third-party penetration testing, etc., and we also have other third-party capability in terms of assessing our stack, assessing the privacy, everything we're doing there. We're trying to have validated. So no one is immune, and unfortunately, from a data breach perspective and ultimately some sort of data issue, it's a when, not an if. And I think that's the same for every business. Mm-hmm. Our job is to minimize that and to try to be very transparent and open. We are somewhat protected, and again, I put that in the caveat in that, remember, everything we have is anonymized at a patient level. We strip out the patient identifiers at source, so nothing on-prem, i.e. in the cloud, in the DIACEUTICS cloud, has patient identifiers. So even if there was a breach, and again, we do everything to safeguard against that, we're with some level of protection there, given that it's all anonymized, and at that stage, it's all got a digital token, and while not completely clear in that regard, it means that we're not having to deal with real cookie data.
And just by extension, this is such a key area. We don't stand still in this area. We continue to invest in best-in-class technology to take preventative action to make sure that this doesn't happen. Thanks.
Ross B asks, do you foresee any opportunities from the expected simplification of GDPR?
TBD. I'm not ready to comment there yet. Maybe, but Europe. We've talked about Europe in the past, and thank you, Ross, for bringing it to my attention. While we continue to grow and offer our services in Europe, it is significantly far behind in our priorities from the US, and therefore, while that market is evolving and the opportunities evolve, we still remain very focused on the US and will do for at least the next 12 months.
A couple of questions have come in around potential interest from private equity or other parties that might be interested in acquiring DIACEUTICS. What is the major shareholders and view in terms of the price at these levels? And I think the general assumption in the questions that are being asked here is that you'd resist any approaches anywhere close to the current share price. Any comment on that, Ryan?
What I'd say is that I think that there is a perception of good value to be had with UK publicly traded business at the minute. I think DIACEUTICS is in that bracket. Ultimately, our mantra is to do what is the right thing for the business in terms of the plan that we have, the strategy that we have, the purpose that we have, and ultimately as well, make sure that we are doing the right thing by our shareholders. I don't think there's a business in the UK that's publicly traded at the minute that isn't getting some inbound from private equity, and therefore I think that it's clear that that's part of the conversation going forward. Right now, I reaffirm that we have a plan, we're executing against that plan, and that's where I'd want to leave that conversation.
One specific question here. Given the likely explosion in neurological panel testing and diagnostics for neurology and the accompanying trialing of new therapeutics, how are you positioning yourself for the expected tsunami of tests and therapeutics in neurology, in particular Alzheimer's? Now, I don't know if that's something you want to go into now, but
I can talk to it really easy, Simon, and then it's a great question, and I think it talks to we're at an era now where we've demonstrated our model and we can show value well beyond what was traditionally perceived as precision medicine, and I think you heard me use the term diagnostically informed treatment. So there's an explosion of tests and ways to ultimately better understand neurological disorders such as Alzheimer's. The great benefit for us, and I think I talked to this, if I didn't today, I have in the past, when we have built our lab network, we from day one have built a data pipeline which receives all the data from the lab, and that means future tests, etc. as well. So we have a lot of that data already to the extent that there's testing in that area. But as labs introduce new tests, they'll automatically come online into our feed, and that's exciting and somewhat future-proofs us and sets us for scale. So while there may be some need to strategically adjust the network to really target it, we feel that we're already getting a good some insight there, and we're already having conversations and in fact already selling some data into that space. So it's certainly a key area of expansion in the future.
Ryan, how differentiated is your DXRX platform vis-a-vis competitors, and what further enhancements do you plan in the coming year?
The platform and the data and the AI and ultimately all the products are very much interwoven in terms of that differentiation and value proposition. Where we are seeing great success and great growth opportunity is in building additional product on top of the data. We have a key differentiator in terms of the latency of that data. Okay, data comes to us sometimes within 6 hours of when a test result was sent out to the physician. That's incredibly quick compared to any other type of data or any other type of interaction potential with the physician. Couple that then with AI, couple that with a marketing stack which allows us to now directly engage with the physician, and that's really getting our clients excited that we can bring an end-to-end solution to them. It's not just the data that's enabling them, we can actually now deliver that a message straight to the physician at exactly the right time, and differentiate. Couple that with AI agentic models where we can, maybe propose next best action, or automate a lot of that interaction. So what do I mean by that? It may be that we're actually identifying early indicators of disease well before that confirmatory diagnosis, and that allows us to track patients well ahead of where we were before, and that's exciting from a pharma perspective, and not just on the commercial side, but also on the medical side. That's where we're going, and we're adding more data to our proprietary lab data set. We've built a multimodal data set which levers in EHR data claims. We're buying these off the shelf and putting it alongside our proprietary lab data, and that allows us to get a much more longitudinal and tangible view of the patient. Again, enabling a lot of that product evolution, which really is an exciting roadmap for us.
Nick, maybe one for you. You secured 3 new enterprise-wide engagements this year, or in the last year. How large is the remaining addressable market for similar large-scale contracts among your existing and potential customers?
Yeah, so I think 7 enterprise-wide engagements is a good start, and we made good progress in 2024. Ultimately, I would like to see all of the 18 of the top 20 global pharma we work with move into that same bracket. So there is some overlap. So the 7 are in the 18 of the top 20, but there's obviously an additional 11 there to go after. That will mean expanding from 1 or 2 therapeutic brands per each of these customers to a third or beyond. That is certainly within our grasp, and we're making good progress on that by adding more brands per year.
Great, thank you both very much. That concludes the Q&A session.
That's great, Ryan, Nick, Simon. Thank you for addressing those questions for investors today. And of course, the company can review all questions submitted today, and we will publish those responses on the Investor Meet Company platform. But before redirecting investors to provide you with their feedback, which is particularly important to the company, Ryan, could I please ask you for a few closing comments?
Yeah, I think again, thank you all for joining us today. 2024 was a breakout year for us. The numbers speak for themselves, and we're very happy with the direction of travel in the business. 25 has got off to a good start. Again, you can see the numbers that we're presenting, and we feel well positioned to continue the growth story of this business and bring us back to the purpose, and ultimately the difference we're making to patient lives is now increasingly tangible. 600,000 patients through 2024 were in some way touched by DIACEUTICS, and hopefully in a very positive and informed way. That fuels this business, and hopefully fuels the future success, of which we feel there is a lot of in the future. So thank you for joining us, and hopefully update you again in the near future.
Fantastic. Ryan, Nick, Simon, thank you very much indeed for updating investors today. Could I please ask investors not to close this session, as you will now be automatically redirected to provide your feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of DIACEUTICS PLC, we would like to thank you for attending today's presentation, and good afternoon to you all.